Good day, everyone, and thank you for tuning into the first episode of Mastering Finance, the podcast. My name is Nicholas Hicks.
And my name is Jarrell Hall.
And we have a great topic for you today. We'll be speaking about financial literacy, what it is, how it affects your life daily, and the traits of someone who's appropriately utilizing financial literacy's information and tools.
Yeah, Nick, and this is such an exciting topic. I mean, financial literacy is so important,
Yes,
right?
it is.
It's simple, but then it's complex as well. And I think the perfect start for us is to define what financial literacy is.
Exactly.
And, the way I would define it is, financial literacy is being able to use or leverage information to make decisions that'll lead you to manage your financial resources effectively.
I completely agree, and it affects all facets of your life, your personal life, your career, and how you invest your money. And if you don't take it serious, it could really affect you.
Yeah, and I think it's important to know that, probably the most important part outside of the definition is understanding like where they are right now, right? Am I financially, not as intelligent as I need to be? And so I think it's really important to just kind of draw the line in the sand to understand where someone is in their journey, where they want to go. And I think this episode helped them to know how to get there. Right?
I completely agree. And if persons don't understand that if you don't take this topic very seriously, it can lead to poor spending habits. It can lead to high debt. And there's an area that most persons don't focus on, and that is the mental stress that comes associated with not being financially literate.
Yeah, no, definitely. And I think the mental health piece is really, really important. Because, when you think about, COVID happening, and then all of a sudden now, at least from my vantage point, it seems like, mental health is such a big point of discussion. And it's important to understand that the linkages between mental health and financial literacy. And then the other point you touched on too was the spending part of it and the high debt part of it, which is, if you don't know how you're spending your money, where you're spending it, how do you then expect that, you'd be in a situation where you don't have stress and to deal with those sorts of things?
I completely agree. And so on the mental side as well, if you don't focus on the debt and if you don't focus on your spending, if you don't take all of this into a full picture, then you're not sure why you're so stressed, the reason why you don't want to go to work, the reason why you've lost your drive, the reason why you're not excited for the future. It could literally be because you don't understand where you're at, where you're going. And so now your mind is saying, stop.
Yeah.
And so that's all very critical to what we do as we move forward. And so there are key pillars associated with somebody who is financially literate. And so 5 of those that we find to be very important is managing how you earn, saving effectively, protecting your money, as well as spending appropriately and borrowing efficiently.
Yeah.
Those are 5 pillars. So what's with yours?
Yeah, I mean, just to kind of expand on those points, I mean, if you look at the first one, earning, right? Like a lot of people, they know, they may not have an idea or a clear idea of exactly how much money they're bringing in, right? Some people don't account for, deductions that come out if you work in corporate. Even some businesses, they wouldn't have a clear understanding of what their revenue looks like. And so it's important to first understand, like we said earlier, to sort of draw the line in the sand, understand where you are now. And the first part of that is understanding, how much money are you bringing in?
Exactly. And so that usually starts with a budget. At its most basic level, you read any financial literacy book, listen to any podcast, gather information from any source. They usually start with a budget. Where am I today? The banks call it a personal statement of affairs.
Right.
Where my money is at, how much of my assets, my liabilities, and then you break that down to a budget, monthly budget. I recommend a weekly, and going over that constantly, whether you're married, whether you're single, whether you're just with a partnership or your business. Every week you should be making sure you're achieving your goals. And then that leads to saving and investing. So when you finally have made your money, how are you saving it and how are you investing it properly?
Yep.
What's your goals? And so most persons look at it and they look very long term. I want to have a house. Or they'll say, hey, maybe in a year I want a house. But how do you actually break that down into quarterly, monthly saves that you need to accomplish? There are persons who are making $150,000, $200,000 a year, and they're in heavy debt. Their budgets are not balanced, and they're struggling. And so if you don't save and invest properly, how can you prepare for the future? A common number that I tell persons or clients that I deal with is a good goal, a 20, 30-year goal is $2 million on a 5% bond.
Yeah.
That reflects $100,000 a year. That's a great place to be in to retire. And so, but that I tell persons that that's what they should try to achieve. But then you still have to break it down into goals that you can achieve, that are achievable to get to that point 30, 20 years from now.
Yeah, and I'm sure our listeners would hear those numbers and they're like, oh my God, $2 million, it's a lot of money. But like Nick said, 20, 30 years, I mean, that's a lot of time to be able to really come up with a plan and break it down into chunks and understand, what you need to do to get there. But it is possible. And a lot of experts actually say that, $2 to $5 million, depending on who you are, what you want to achieve, like that's the number that you probably would need and draw down from every year to be able to live comfortably in retirement. I think it's a good sort of shock fact for people to understand that that's what the reality is. And it's important to understand who you have to be as an individual to get there, right?
I completely agree. And to your point about persons hearing that, maybe being a little rattled, persons always say, hey, I want to be comfortable, or I want to be rich.
Yeah, what does that mean?
Wealthy. What does that actually mean in a sense? And most persons can't put that down on paper. And they just know, I want to achieve that. I wanted the most expensive bag. I want a 2-story house. I want the nicest cars. My kids go to the best schools. But what does that financially mean? How do you stay where you are today, and how do you make actionable steps to the future?
Right.
There's a good career. Like a lot of persons don't look at barbers and say that they are very wealthy. There are barbers who are making $100,000 plus a year when they're providing the best service to clients. They have the best opportunity to earn. However, the problem is a lot of persons in those trade fields don't invest their money. They leave their money in a shoebox, or they put it in the bank account. They don't invest it properly. And so that's where the problem comes with future goals. They're not investing it.
Yeah, and what I would say is, you have to know yourself. Know yourself enough where you can understand how you could possibly attack what we're talking about, right?
Agreed.
And just to sort of, just to kind of harken back to the individual point that I made earlier, like you have to know who you are, right? And I think one of the two probably, most important things is to be consistent and to be focused.
Exactly.
Right? To be consistent enough to know that it's not a race it's not a sprint, it's a marathon, right? It takes time to kind of get to where you want to get. And I don't know if you have any other thoughts on that.
I have a lot of points on that, because you could find, and I like to mention persons who are successful, because those are the persons I find that are actually not saving as much or protecting their money, or not as consistent as, because they say, you know what, I'll have more next month. And so you will find that there are persons who make considerably less money, who have their kids in very good schools. And someone who has a lot of money would look 10 years from now and be like, how does this person now have a house and I don't have a house at 28 or 34?
Yeah.
And because they may say, you know what, I'm making this money, I'm going to get me this really nice condo to rent. And so you're not in a position.
The wealth effect.
Exactly.
Yeah.
And so now you're in a situation where, though you're consistently making the money, you're not consistently protecting your money or having the discipline to maintain your spending and investing properly.
Yeah, and that brings up a pretty cool story I read a few weeks ago. So it's about this guy, he was a janitor, and he was making about maybe $25,000 to $30,000 a year. But at the end of his career, call it 40, 45 years, he had amassed a portfolio of between $3 and $4 million. And so one, that brings up like several points,
That's
right?
impressive.
One, there's no excuse, right?
Exactly.
Because if we look at what our GDP per capita is, it's not too far off from that, right? And then two, it says that it took him time to get there, which goes back to discipline and consistency. And so what the article spoke about was the fact that this guy started off making, I think it was weekly or bi-weekly investments of $25, right? And over time, through that thing called compound interest, which we'll probably do a whole other episode on. But it allowed him to amass this, in some cases, a very large portfolio. And he retired a millionaire, I think 65 or 67, somewhere around there. But I brought that up just to say, like you could do it, right? You just have to understand, well, first you got to listen to Mastering Finance. And then secondly, you have to actually, think about and do your own research, of course, to sort of reinforce some of the things that we bring up specifically about this.
And just to add to your point as well, I worked at a brokerage house before, and you used to see all these millionaires on these accounts, and you would see they bring their children, very wealthy children, born into money, silver spoon, and they're coming to do the savings program. The kids are putting in $50 a week or $50 a month. So even though you're wealthy, they're creating that discipline, that consistency. That's what they're teaching to the children. So when they then have access to this larger pool of money, they maintain that same standard. And so another point, a point for me, a pillar, is recognizing how others do it. So I study persons, and persons like to study them when they become successful. So you look at a good example is Apple with Steve Jobs. Persons like to look at, when did he create Apple? When did he start it and begin his mission? I like to look at it when he was in Europe picking oranges or apples, and he said, you know what, I'm coming back to America and I'm gonna join this computer club. Why did he join the computer club? Why did he decide to get on this journey, especially in entrepreneurship? So for me, studying what others are doing, how did they get on their journey? and not just looking when they became successful, but looking at the hills and valleys they had to overcome to even get on their path. And that tells you, you may be in a position where you're not where you want to be money-wise.
Yeah.
Others have been in that same position. You may be 21 feeling that way. You may be 45 feeling that way. There have been persons at every age point that you have who was amassed success, amassed monies and wealth. And so for ourselves, is you learn, study, speak to persons, you then understand, I'm really no different than a lot of other persons.
Yeah,
I
was going to say, and it brings up a pretty good book too, like a book by Napoleon Hill, Think and Grow Rich.
Yes, love it.
Yeah, man, that book. So basically, the book talks about people who've been successful, and I think Napoleon. This book was like early, I think it was 1940s. I can't quite remember the date, but it just speaks about him interviewing all these persons who were successful millionaires. I think it may have been like John D. Rockefeller, maybe J.P. Morgan, all those titans of industry back in the day. And he interviewed these guys, and he amassed this sort of like big catalog of what these guys did and how they did it. And so at that point, it's like perfect and spot on when you talk about looking and recognizing what others did and how they did it, and then obviously normalizing that to you, the individual.
Agreed. And to add, another good point that I think of is accountability.
Yeah.
A key pillar as well as accountability. Yeah. A lot of persons don't hold themselves accountable, especially persons who are getting weekly checks. They'll say, man, next week I got that. Yeah. I'll start.
Cash is flowing.
If you don't hold yourself accountable, you will not achieve the goals that you would like to.
Yeah.
And so whether accountability is a spouse, a friend, maybe it's just joining an account, one of the banks that allow you to have a savings portion associated with it. Yeah. Even similarly, a most basic one is insurance. If you do the higher level of insurance, they have a savings and cash component of that, of which your funds are invested. But if you don't hold yourself accountable, if you don't find the mechanism with which you yourself can achieve this goal, then it won't happen. And if you spend your day online trying to do what other persons have done, but don't put it to your own individual personality, it's not going to succeed.
And it's important too, like to that point, like when you talk about accountability or accountability partners or accountability tools and stuff, like from accountability partner standpoint, like you and whoever that person is got to be on the same page.
Exactly.
Like for me, I'm married, right? So when me and my wife talk about finances, it's about setting the time aside, right, and spending that time to go through everything, talk about your finances. I call it financial intimacy, but you can call it whatever you want to call it. But the point is that you spend that time, that person and you and that person are on the same page, you're trying to do the same thing. And for the single folks, it's the best friend, who understands what you're trying to achieve. They may or may not be on the same page, but they respect you enough and they value your friendship, they value what you're trying to achieve enough that they want to, hold you accountable to that.
Agree. And it comes with hard conversations and hard realities.
Yeah.
When you hide things from each other, whether it's even yourself or your partner, you're now in a bad position. You have to be honest and state exactly what's going on, what you expect to happen. And if you don't do that, then you won't be able to achieve it. Yeah. And so I completely agree with you.
Yeah. Yeah. And some people, they even get into the to the trap of lying to themselves when they're like, I'm not gonna count this $20 here. That was just, this month.
No, there's a joke when it comes to businesses that persons used to make about me when somebody wants to get funded or they would like me to assess their plan, I always look at waste management. It's a running joke.
Yeah.
If you don't account for simply the small garbage that has to be picked up for your business or your house, then as far as I'm concerned, you're not ready yet to get funded.
Yeah,
because
totally
those small things add up. If you think that's small and you let that go, if you like to get that extra scoop of ice cream and that's outside of your budget, those cents adds up to dollars adds up to the hundreds and thousands, and now you're realizing, why am I losing money? Why is there money just leaving my business? Why is money leaving our bank account? We thought we'd have had 10,000, 5,000, 100,000 by now, and we don't have it. So if you don't be accountable, you won't achieve it.
Yeah, and even in my sort of entrepreneurial experience, that's very true, right? If you don't measure everything, you can't achieve success. Success ultimately is about how well do you measure performance, how well do you optimize, and those small things that may seem trivial, they all add up over time. They may even speak to some operational inefficiencies that you need to address.
Exactly.
That over time would cause you to, go belly up. So I definitely agree. You gotta focus on the finer details and understand what role those play in you being successful or you not being successful, business, personally, etc.
And all of those small things also have nuances. When you look at the waste management, a regular company may just have a regular garbage, small one, or you may need a large one. And if you're a medical facility coming to get funded by me or any person you're looking for funding for, and you don't have that, for medical facilities, they have a special requirement for waste management to get rid of needles, to get rid of those items. And so if you're not taking those,
a major line item,
that's bigger than you expected it. Your restaurant, if you're looking at those, that comes with a different level of traction of moving things in and out. And so that not only affects your money, but also affects your efficiency, as you say, your logistics. How quickly are you getting these things in and out? And so that's very important to understand yourself in totality.
Yeah, and then sort of to speak on the individual perspective, it's about, setting up, when you set a budget, and just kind of going back to our earlier points, but in that budget, you have to literally include every single dollar that you're going to spend. So if it's, buying a bag of chips from the gas station when you went to go get gas, well, that's probably should come out of your allowance if you have an allowance line, or it should come out of your eating out budget or miscellaneous. But you should literally budget for everything. If it's something like, vehicle maintenance, just have something allocated for vehicle maintenance. If it's for medical, same thing. You're just allocating theoretical dollars to the possibility that these things may happen. And in the event that they happen, you have some level of a reserve for them.
I agree.
But if you just sort of focus on the big items like, your rent or your mortgage or your light bill, your cable bill, and then just say, I'm going to eat out and I'll just spend the money, you travel, like all these things you just have to think about, understand where every single dollar is going. And then, like we said earlier, take stock and understand, is this necessary?
Agreed.
Right?
And one thing to add too is, this is something I like to tell persons. When you look at other persons and you look at their success and you follow their path and now you're looking at yours, every year that you do not have discipline and follow your regimen, it makes it harder for you to achieve the goal by the time that you want to get it done.
Yep.
So if you say by 40, I want to have a house and it's paid off, and you said at 21, the amount that you needed to accumulate to get to that point is lower than when you're 30.
Yep.
And so if every year you push it off and say, you know what, next year, new me. This isn't a gym membership. You can't wake up every January and just say, 3 months, I'll be where I need to be. If every 6 months, year, 2 years that you push this down, the harder it's going to be. So then you look at your peers. And your peers are now accumulating these assets, and now they have accumulated, so they are now have more leeway of money to do other things. So now you want to match their fun time, their happy time, but you haven't done that sacrifice.
Too late to the game.
And probably your sacrifice is going to be harder than their sacrifice because they started earlier. So a key thing is you do need to take it serious now. Yes, you could have done better if it was 5 years ago, 10 years ago, but today, as they say in real estate, it's always better to buy land 20 years ago. But today is better than buying it 20 years from now.
Right.
And so for yourself, the point at which you are starting today is the best point you can start now.
Yeah.
And so you have to do it. But if you don't, it will only get harder.
Yeah, no, I agree. And there are lots of examples of that too. Like even if you think about, let's just talk about maybe investing in the stock market.
Correct.
Right? They always talk about, the more time you spend in the market, the better it is for you.
Correct.
Now, obviously you allocate your dollars in, as best as possible in the right instruments, right? The right stocks, exactly. ETFs, all that type of stuff, which we could talk about in a whole different episode. But you want to spend time doing that. And over time, you will amass lots of wealth. So the difference between someone who invests at 25 and someone who starts to invest at 45 is massive.
Yep.
You're talking about someone who could be a multi-millionaire versus someone who could probably just amass $250,000 in that time frame.
And so I'm glad you're starting it at 45. So if you're a listener and whatever age, whatever demographic you're in, whatever place you're in, we're willing to provide this information and tools for you to learn so that you can achieve your goals. But just always remember, no matter where you're at, if you wait to become disciplined, to get this information, to get these lessons, you're only making it harder for yourself, and your sacrifice is going to be even bigger.
Yeah.
So when you're looking at financial literacy, there's 5 pillars, 5 things that you have to critically look at: how you earn, how you save and invest, how you protect your money, how you spend it, and how you borrow. Those are 5 pillars of understanding your financial literacy. This is whether you're an entrepreneur or whether this is your personal life. These are 5 things that you have to constantly look at, assess, and understand.
Yeah. So borrowing, that's something that I would venture to say lots of people do.
Exactly.
Right? They borrow for cars, they borrow for vacations,
leisure,
they all manner of things, right? And so I guess in finance, we'd probably call that in some instances bad debt.
Correct.
Right? So borrowing is very important, but it's even more important to understand how to borrow,
correct,
what to borrow for, and you start with the question, how is this potential borrowing going to contribute to what it is that I want to achieve?
Agreed.
Financially, right? And so things like houses and, apartments or cars, all that's relative, right? Because someone can borrow for an investment in real estate, right? They may decide that they want to purchase a house, and that house, is causing them money because they said, okay, I want to buy $1 million house. It looks nice. It's what I always wanted. But then months later, you have the maintenance and the upkeep of this house. It's draining you financially. Things get stressful. That's one bucket.
I agree.
The other bucket is you borrow for an investment in a triplex or a duplex or a condo, some other form of real estate, commercial. And that, one would argue, would be a good investment or a good borrowing because it's bringing you income, right?
Agreed.
Which solves one of the main problems for persons who are in the process of gaining financial literacy, which is solving for the revenue side or the income side, right?
Agreed.
And so when you look at borrowing, you want to really make a delineation between borrowing or using borrowing to acquire wealth versus just for consumption.
Agree. So it's really wants and needs.
Yeah.
Both of us could buy the same house, the same $1 million house, $200,000 house. And for you, that could be a want. For me, that could be a need.
Right.
Similarly, some person may want to borrow for school fees. That's not a good decision, but you may need that. That may be a need to keep your child in school. You may need to borrow that. Yeah. So that goes back to understanding your situation, understanding what you want to do. But so I do understand why sometimes we call it bad debt, and I agree it's bad debt, but it's a necessity. Right. But you should not do that on the regular. And two, you should make sure plan for these expenses so you don't have to do that again. Similarly with a credit card, just because you have it, are you spending that on wants or needs?
Yeah.
So most persons spend their credit card stuff on wants.
Yeah.
And I'll pay for it next month. You're still accumulating, depending on the bank you're at or the program you're accumulating immediately. I'm seeing some banks are giving you 2-3 months sometimes, but it's still understanding your situation. And debt has toppled empires. Debt has destroyed lives. The debt that you take on today, especially with the credit bureau coming on board, can affect your great-grandchildren. If you yourself take on a $300,000 loan for an investment that you didn't fully assess, or you purchase a house just to impress your friends, your neighbors, your cousins, to meet, just to say, hey, I'm on the same level as you. That same pressures. Debt level can literally put you in a position where I've seen persons because of COVID, huge debt above them that they just can't pay.
Yeah.
Persons who were affected by even just the financial crisis in 2008, 2007. You have those persons affected by all that was by debt.
Yeah.
And so if you don't take your time to assess it properly and shop around for interest rates. If you just go to one bank and make a decision of that,
it's not good.
You're not effectively using financial literacy properly.
Yeah. And I think people, and a part of this financial literacy thing, piece two is also like, you gotta know the system or know enough about it. Like, because that point about the bank part, I mean, that's so important because, like you say, people will go to one bank, someone tells them, 6% interest for a mortgage, and they're like, okay, let's just go with that. But you didn't shop around. Like, you have the ability, you have the right as a consumer to go to as many banks as possible to find out how much you qualify for, what's the interest rate, what's the structure of this debt, and be able to make a decision.
Completely
and you'd be surprised how once you, I guess, sort of make it aware that you're not making a decision with the first option, but you're shopping around, how much those offers start to change.
And what that means is the bank is not the prize. You, as the person who was borrowing from the bank, is the prize.
Exactly.
You will receive an offer from someone, so now you go to 3 other banks.
Yeah.
Hey, I was offered $50,000 at this rate. What's your thoughts?
Yeah.
And your banks will look and be like, man, that's interesting. They approve them. Okay, let's look at this. Maybe we'll offer them 20 bips, 50 bips lower.
Yep.
And so you have to recognize you are valuable. Your time, your money is valuable. So you have to respect that at all times and shop around, gather as much information. You see that, what you're mentioning in insurance, you see that in banking, where I have a cousin. So I only go to them. I assume they give me the best rate. Even if it's your friend, that's your cousin, always shop around, always look at your opportunities. Do not just give anyone the autonomy to control the decisions of how much you borrow, where you spend. Yeah. It's very important.
And it's ironic too, because people would do exactly that if they're trying to buy a pair of shoes, if they're trying to buy airline tickets. But the biggest investments in people's lives, they're like, let's go with that. First option. They don't shop around. But I think it's a part of it, again, goes back to what we're talking about, financial literacy. People not understanding like what they have the right and ability to do if they just ask the question.
Agreed. Another critical point for me is spending. When you're looking at how you spend, I know we touched on it in so many ways, but spending is important. Those couple cents add up. When you look at our parents, they used to use food stamps, And my mom used to have us on Sundays just printing out the stamps, and we would carry them. They carried the food store. In my generation, I've not seen anyone really do that. I know there are a few friends who say that, but I don't hear it's not even seen as a good thing. It's almost like, okay, this is someone who might be going through it.
Like,
or
why you got to be using
why you got to. You look in the paper still has deals. Persons aren't looking at those deals in our generation. It's whatever's the most efficient, what's the best place. Oh, there are certain persons I know who like to buy out west. It's just their preference. It's just better that
prices ain't different.
Well, sometimes it's higher. Sometimes it's higher. And so you have to realize, take away your pride, take away your ego is what I'll say. Take away your ego and look for what's best optimizes for your family. And so if you're not looking at the best way of spending, some persons only want to do Amazon. Oh, this is my favorite topic when it comes to behemoths, spending in America. They just always assume it's just cheaper in America. Everything is cheaper in America. It doesn't matter. If you sit there and really put in your cost to fly over there, see what persons do, they only look at the price when they walk in the shop store. But they do not look at the cost of flying to the States.
The hotel stay,
getting the car,
rent a car,
getting the place, the food. You know, when you go over there, you and eat in the airport, and then. And if it's multiple legs of the flight, you want to eat when you get to the Miami airport, or Charlotte airport, and then when you land. So now you're accumulating huge amount of bills, and then you're not factoring the cost of bringing it back in. And when you accumulate more than it, you're literally spending more than you spent in Nassau.
And especially in this high inflation environment, you could look in the stores in the States now, like a Walmart or Target or wherever you shop, and if you compare the prices, they're not vastly different.
Agreed. And then some persons don't have the patience to even do water shipments. They have to come on the plane, man. I need it on the plane. And so maybe, hey, if you plan your life out well enough or where you want to be, you can say, you know what, I can take this money and I'll make this investment into this huge, what's it called? Container of items. It won't be container, pallet of items, and I could wait a month for those things to arrive, my detergents and those. And so you have to find ways to best spend. Most persons spend hurried spending or impulsive spending. Just whatever I see. I'm on the road, whatever I see to eat, I'm going to just grab that. So now you're eating unhealthy or you're spending unhealthy. And so you have to plan these things out. Me, myself, growing up, I didn't like that. I really enjoyed impulsivity, just feeling that feeling. And so you're in a situation now where I have to sit down. My wife is making sure I am sitting down and doing it. You got to. And so you have to do that, and that's very important.
I mean, and so just to recap, we've talked about all of the key pillars, right? We've talked about earning, we've talked about saving, we've talked about protecting, which we just touched on, and we talked about spending, and we talked about borrowing. And so, having spoken about those things, I think it's important to sort of speak about the character traits of someone who is financially literate. And I think we started to talk about it earlier. And the first two is someone who's consistent, someone who's focused, and also someone who has the ability to be self-aware.
Important. And accountability. I'll put accountability in there as well. Those are very critical. So when it comes to understanding financial literacy and really using it for your life, if you do not use it, you will lead to high debt, unreasonable terms, inappropriate or inefficient spending, as well as you will literally mentally put a huge cloud over yourself if you do not take this serious. And it's very important, no matter what stage you're at, no matter if you're super wealthy, whether you're just starting, whether you're younger, you're more mature, it doesn't matter whether you have a bachelor's or not. You have to have financial literacy and take it serious. So this podcast itself and this first episode, I want to make sure that the viewer understands that this is for everybody. No matter what stage you're at, you can take some of these tidbits, add it to your life, or recommend it to somebody else. Our goal is to simply provide you all the information and all the tools you need so you don't make those flaws or mistakes that persons have made for millennia. The issues we're going through are not new.
They're not new.
Only thing might be different is the vehicle of which we're using our phones now or card swiping. But there are persons who've been going through this for thousands of years as regards to histories, countries. It just happens. So you have to take it serious, recognize, put that ego to the side, take accountability for what you're doing and what you have done, and really make your goals realistic and achievable.
And the biggest advantage that I think our generation has is the access to information. Right? Like this podcast, in this particular format did not exist when our parents grew up. Right. So the fact that you can literally type something into Google and get all this information is just incredible. And I think people need to spend the time to do that, try to acquire the information and try to understand how to use it, which is what we talked about in financial literacy. And so I guess to kind of close this out, I think it's been a great episode
Marvelous
so far.
episode. And for your career, you've done so successful in your career, and even as an entrepreneur, and me helping a lot of entrepreneurs, you recognize that even ourselves, we still have to get information.
Yeah.
We have to consistently learn. And if anyone develops that ego or arrogant thing that I've made it, just as easy as you made it, you can lose it. And so you have to continuously get information. You and I are continuously reading books, talking about different podcasts, just gathering, having mentors just around so they could tell us and making sure we're accountable or teaching us things we didn't know from what happened in the past. We have to constantly doing that all the time. So I'm glad that we are doing this podcast. I'm glad this episode went so smooth, and I hope you learned a lot from this episode, and we look forward to doing so many more, providing so many tools for our listeners, locally, globally, and internationally.
Yeah.
Thank you so much for tuning into this first episode of Mastering Finance, the podcast. We are looking forward to constantly providing you new information and more tools to help you accomplish your goals, whether it's with your company, whether it's in your personal life. And so please, we look forward to providing you episode 2. Please follow on our social medias. It will be in the link below. And we look forward to following us on this journey as we help you.
Yep. Guys, like and subscribe. Thanks for tuning in.